makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter. And here's what's coming up on today's program. Colorado's highest court rules that Donald Trump cannot run for president in the state next year because of his actions inciting the U.S. Capitol attack. Well, the unprecedented decision is now headed for the U.S. Supreme Court. Traders ramp up bets of a BOE rate cut next year, or cuts next year, as UK inflation slows far more than expected. Plus, the U.S. weighs military strikes on Houthi rebels in Yemen in response to threats in the Red Sea, and global trade braces for more disruption. We'll discuss, of course, rising geopolitical tensions with the EU's former foreign policy chief, Catherine Ashton. Now, let's take a look at what the European market maps are telling us. I'm all tongue-twisted because I've been looking at the markets for so long trying to figure out what oil does next because of these shipping concerns that I can no longer talk. This is not a good thing when you're on TV, but I can show you what the FTSE is doing. It's getting some 0.4%, a little bit of a subdued market action overall. We are also getting into the holiday period. So if you look at volumes, they're a little bit lower than usual. It could be for a very worrying kind of concoction when a lot of anxiousness on the markets, a lot of questions about shipping, global shipping. Remember, if you have a cargo ship or an oil tanker and you have to go the long way around, so around Africa instead of going through the Red Sea and the Suez Canal, it adds about $1 million per trip, and that's an extra 7 to 10 days. The FTSE, FTSE maybe in Italy down 0.2%. Again, UK inflation slowing more than forecast, and that could change everything when it comes to rate cut bets. Now, Colorado's highest court has disqualified Donald Trump from the 2024 ballot under the U.S. Constitution insurrection clause. Now, Trump's campaign says the former president will appeal to the Supreme Court. So let's get all of the details from Bloomberg's Bill Ferries. So, Bill, this seems significant, but for the moment, we're in a little bit of a wait-and-see situation, right? So President Trump can still go on the ballot until the Supreme Court actually decides what's the reality.
That's right. It's an unprecedented move by a state Supreme Court to effectively kick a potential presidential candidate off the primary ballot. But whether it's a consequential move when it comes to the 2024 election, we just don't know. That decision to remove him from the ballot in the March 5th primary is on hold, pending an appeal. We would expect that appeal to be filed at some point, probably this month or very early in January, all the way to the Supreme Court. We would expect the U.S. Supreme Court to take that up fairly quickly. Now, there's still a lot of other potential scenarios in terms of how this could go, but for right now, it's not a done deal.
So does this make him more popular? I mean, we've seen this in the past where actually, something where they go quite hard on Trump, and so therefore people rally against him. So how have former president's allies also been reacting?
Well, he and his team are already trying to take advantage of this in the sense that they're saying it was a politicized decision, that Democrats, fearing that they will lose the 2024 election, are trying to just remove him from the ballot so they don't have to run against him. That's something that's going to resonate very strongly with his core supporters, many of whom are it's that core group that votes in the Republican primary. And the one important point here is Donald Trump, even if he never appears on the Colorado primary ballot, he can still become the national Republican nominee. He does not necessarily need Colorado citizens to vote for him to become the nominee that runs against Joe Biden in 2024.
So what are the next steps? How soon will the appeals case actually be considered?
Well, this Colorado Supreme Court put their decision on hold through January 4th. Assuming President Trump and his legal team put in their appeal and the Supreme Court, I would expect them to take up this case very quickly. I think you would expect a decision probably at some point in January. You've got to remember the primary is the first week in March for Colorado. You have to print ballots. They're secure documents. It's not something you just do a week or so before. They're going to need several weeks to print and distribute those ballots. So the deadline is probably somewhere in early to mid-February for a decision to be made either way.
Bill, thank you so much. As always, Bill Ferry's there on the very latest on the U.S. elections 2024. Now, from politics to the markets, let's bring in Hannah Smith, Vice President for ETFs at State Street Global Advisors. Hannah, thank you so much, as always, for joining us. I don't know whether it's too soon to already try and think, right, if President Trump becomes President Trump again, then this changes geopolitics. You could have a couple of trade wars, or whether this is something to think about later on in the year.
Well, good morning, Francine. Thanks for having me on the show. I think what we've seen this year is that geopolitics really hasn't impacted the market as much as we had expected. For example, looking at the Israel-Gaza war and the other shocks that we've seen throughout the year, we've seen limited impact in the markets in the direction. And looking at US more specifically, it continues to be one of the stronger markets and also a really attractive investment destination. So I caution to think that this is really going to make any changes to the markets at the moment.
Yeah, because the market is so obsessed with actually rate cuts, and they're pricing in like 4. Here in the UK, they're pricing in more after that inflation shock. Is the market right in pricing so many cuts, or is it still all to play?
I think that there's a certain element of that is warranted, and I think the consistent theme has been that inflation is falling, and that is really what the market's been looking at when it's been rallying off the back of some of the weaker data that we've seen come out, and also the inflation numbers moving in that deflationary direction. So I think the market is right to be pricing in some of those rate cuts. I guess the question now is the extent to which we see those rate cuts and how many come. But I definitely think that we're going to see those going into 2024.
And here's Raphael Bostic talking about rate cuts.
In terms of getting glimpses of where the future is likely to go, there are really 3 things I'm looking at, and they really deal with the 2 sides of our mandate. So inflation is too high. We got to get it down to 2%. I've been paying a lot of attention to what's happening on the 3-month, what's happening on the 6-month, because those are the things that are going to ultimately be the true contributors to overall inflation. And what you see with those is that, by and large, they have been lower than where our headline numbers have been.
Market's reaction seemed to not be rooted in how the FOMC actually works. Well, that is, the Open Market Committee decides on today's policy. They don't decide on what are we going to do and commit ourselves 6 months from now. That's not how it works.
And then we had Mohamed El-Erian coming on yesterday being so punchy, Hannah, saying actually this is a communication mess because the market are so obsessed with what Jay Powell said and the fact that there was this huge repricing that it's also changing what other central banks, traders, are thinking they will do, although the economy is widely different.
Yeah, I definitely think if you look at the events of 2023, the market does get carried away with itself. And a lot of the time it's looking for what can support its narrative. And the narrative is that there's going to be a soft landing and that we're going to see rate cuts going into next year. So what we've seen is when data comes out this morning, for example, with the UK inflation coming in lower than expected, the market's rallied off the back of that. So that's really, really consistent with the theme that we've seen throughout the year.
Yeah, I guess, is that because there could be a misunderstanding in the markets that if inflation goes down too quickly, it could also, we could see a recession? I know everything depends on the labor market, but if everything slows down too quickly, you don't know what you're left with.
Yeah, I think this is an interesting point, and I think what the market's looking for is if we do start to see these inflation numbers, lower inflation numbers earlier, then that means that it gives the central banks the remit to start cutting, and that will revert in a recession. So I think that's why the market is rallying, because these signs are positive for the central banks in the sense that they can now start putting out the narrative that rate cuts will come, as we've seen the Fed do.
All right, Hannah, thank you so much. Hannah Smith, Vice President for ETFs at State Street Global Advisors, stays with us. We'll talk a lot more about the UK, of course, inflation print this morning. Stay with us, and this is Bloomberg. Now, the pound has extended its slide against the dollar after the latest data this morning showed that inflation in the UK is slowing more than economists had forecast. Now, UK November consumer prices rose 3.9% from a year earlier, well below the 4.3% estimate. Still with us, Hannah Smith, Vice President for ETFs at State Street Global Advisors, and Anna Andrade from Bloomberg Economics. So thank you for staying with us, Anna. And Anna, thank you for joining us. When you look at the dynamics of the UK, what does this fall in inflation actually mean for what the BOE does next, Anna?
So, I mean, today's inflation was a good print all over the place, and it was exactly in the places that the BOE wants to see progress. So what drove the decline in services inflation was essentially the stickiest part of the services basket. So the BOE kind of, it's very hard for them to continue with their message from the December meeting. So we're definitely going to see a dovish tilt at the start of the new year. Then the question is, when do rate cuts start? I mean, our base case remains June, just because there's a lot of uncertainty about the impact of the minimum wage increase and the budget, and we know that BOE is very data dependent, so it will want to see that in the data. But of course, there's now this scenario and this possibility that it's becoming increasingly likely that it starts in May. And then the question is, does it go at every meeting, meeting the market expectations, or does it exert a bit more cautious? And yeah, I think it will be a bit more cautious, but we will have to see.
Yeah, Hannah Smith, and again, for a long time, actually, we said, well, this year is going to be the UK year because valuations are so cheap. You can go in, investors were interested. Is 2024, we've seen a really resilient UK. I mean, it's been bumpy, but it's actually been more resilient than we thought. And it's also election year, so I imagine the government will throw everything at the economy. And it's looking like it's kind of going, the BOE's way.
Yeah, definitely. I think, we've said for some time the UK remains an attractive investment destination, primarily because it has a really defensive tilt to it in terms of its sector allocation. It has high allocation to consumer staples, healthcare as well. And I think in this environment where there's still concerns around the economy and growth remains fragile, that's kind of the place that you want to be invested when you are looking at equity allocations.
Do you worry, Ana Andrade, that, again, if we have more stimulus from the government right before the election, that this will be inflationary, so that actually it would counter what the BOE does? Or can they do it in a way that it will still be tamed?
Yeah, no, that's a very interesting question. I think they can. So essentially what we saw at the autumn statement was the government kind of, giving some fiscal giveaways and doing some tax cuts, but in a way that it also increased the supply side of the economy. So I guess the question is how the OBR is going to score the sort of measures that the government is going to do. If it's playing out just stimulus, fiscal stimulus, then it will be a problem for inflation. As I said, I think there's two risks that, around inflation ramping up again next year. One is related with the increase in the minimum wage of 10%. That's going to come in April. And the other one is related to the budget. But then, of course, if we have something similar to the autumn statement, where the supply side of the economy also increases, then the inflationary impacts, won't be as big. But I guess it's the uncertainty that the BOE cares about, and that's why it might exert some caution still.
But, Andrade, is it, again, when you look at, I guess, the labor policies, because we're in election year and because the Conservatives are 20 points behind for the moment, how different will the economy look under a Labour government compared to what we would have under the Conservatives? The policies so far seem to be pretty matching.
Yeah, I mean, it is. I guess what we saw at the autumn statement was that the government had some fiscal space and it preferred to use it to fund tax cuts. There's a question of whether, if we had a Labour government, whether it would have preferred to maybe, stimulate public investment a bit more. I mean, we saw Hunt doing the full expensing for investment. That was good on the business front. But the truth is, we still have public investment in the UK still lagging the G7. That gap is only set to widen further. And so there's a question mark about whether Labour will use any sort of fiscal space that it has to kind of, tackle that gap. I think that's where the main divergence might come from.
And Hannah Smith, you've been quite supportive of UK assets for quite some time, but overall your favourite asset class is still fixed income, I imagine.
Yes, definitely. I think if you look at fixed income and the expectation now that rates are going to fall, that's very supportive to the asset class. And also, interestingly, if we look at two-year Treasury yields, they are now higher than the S&P earnings yield, which is a really good signal in terms of attractive valuation. So I think fixed income is definitely been underperformed this year, and we expect that to change next year.
And so when you look around the world, you still like US large caps. Is there anything, I mean, let's take stock of like the end of 2023, which has been an incredibly hard year for many people. How do you change going into New Year?
Great question. I think, still really like US large caps. I think in this environment where growth is fragile and you want to be in the real quality stocks, and US large caps have consistently performed and have strong fundamentals. I think an interesting asset class that we like at the moment, or equity, is Japan. Japanese equities, for a long time, valuations have been attractive, but it hasn't really come to fruition in terms of the performance that we've seen. But at the moment, there's a real push from the Tokyo Stock Exchange governance in terms of governance for companies within the index, and so we believe that that's going to start turning into real shareholder values with increased buybacks. And Japanese companies also have high levels of cash, more than double that of the US and Europe. So we think that will start to play out as well.
But yesterday was a bit disappointing because we didn't have forward guidance. So are we just going to see bumps along the road?
Yeah, yesterday it's probably as expected. We haven't seen any change. It's the 65th time that there's been no change in terms of the policy. But I think that a lot of the Japanese policies are dependent on what we see from the US. So I think it's very much wait and see. If the US starts to implement rate cuts, then that will actually be supportive for Japan.
Wonderful. Thank you so much, Hannah and Anna. I need diction lessons. Anna Andrade and Hannah Smith from State Street Global Advisors. Now, the UK's financial regulator has also set out its plan to simplify its listings regime to revive London stock markets. Now, the Financial Conduct Authority says it will replace the standard and premium listings rule with one set of streamlined eligibility and ongoing requirements. Coming up, a financial lifeline from South Korea, delisting proceedings in New York, and a dash deal with Richemont. We'll explain the dramatic fall of luxury e-commerce firm Farfetch and how its investors could face a total wipeout. That's next, and this is Bloomberg. Well, this is what's going on with Argenx. Now, this is the company that's really been plunging today, one of the worst performers in the trading session after its only medicine didn't help patients with a rare skin disorder. And that's a second setback in less than a month. That's prompting the Dutch biotech company to probably narrow its plan for the drug. And that's, you can see, sending the share price down some 31%. Now, the New York Stock Exchange is to begin delisting proceedings against Farfetch. It follows a rapid fall from grace for the e-commerce company, which earlier this year was expected to tie up with luxury giant Richemont. Instead, it's just secured a $500 million loan and lifeline from South Korea firm Coupang and U.S. investment firm Green Oaks Capital. Now, existing shareholders in Farfetch will be fully wiped out if the deal goes ahead. Let's unpack all of this with Bloomberg Opinion's Andrea Felsted, who specializes in retail. Andrea, first off, this is an incredible story. And shareholders being completely wiped out is not something that happens very often. So what happened at Farfetch?
There were two things that happened, really. Farfetch came to market as this capital-light alternative to online luxury. Yoox Net-a-Porter, Matches, they have to buy in the stock and then sell it, a bit like a conventional department store. We know luxury goods are very expensive. That's a lot of capital outlay. So Matches we don't do that. We just connect the luxury buyers with boutiques, and they do all that. We don't have to take any stock on our balance sheet. We don't have to invest. So that was its pitch. Now, along the way, it changed its business model. It started to buy a lot of companies. The biggest one was New Guards Group, and that holds the license to operate the late Virgil Abloh's Off-White business. This was $675 million. And it carried on buying. It bought Browns, the real iconic London department store that helped launch a career of lots of famous designers. And that put a lot of strain on its finances. It burnt through more than $1 billion of cash since listing. It had $1.6 billion of total borrowings. And this was a real strain on its finances. And it couldn't operate under this level of financial strain. Hence, it looked for a buyer, and hence we have the rescue.
Can it survive in its current form with the rescue?
Well, it should be able to if they pump in more funding. It will have to go back to basics. It will have to make disposals. It will have to simplify its business. It will have to go back to being that you know, that marketplace, the Uber of luxury, if you want, to carry on operating.
Andrea, so what's also very surprising, so this is, a company that listed in New York, it listed for a hefty amount, and no one really saw this coming. So even a year ago, the share price was under pressure, but no one would thought it was looking this bad. And you wrote a brilliant opinion piece actually explaining, the mismatch between, I guess, analysts, even some journalists, and why we didn't see it coming.
It really fell through the cracks between the two markets. So it thought it was a tech company, so it listed in New York. But in New York, it was too small. Nobody paid any attention. The people that followed it were very tech-focused. All of the expertise in luxury is in Europe. London, whatever we say about the London market, analysts and investors are very keen on these things. I compared it to THG, which came under an awful lot of pressure from an activist, not really an activist investor, but an independent analyst that said, we think it's one of its businesses everyone thinks is great. We think it's overvalued. It's not all it's cracked up to be. That caused a fall in the share price. And the founder, Matthew Moulding, is fond of attacking people like this. But I argued that actually this did the company a real favour because it was forced to tackle its governance and its strategy, and that's put it, back on a firmer footing.
Yeah, which didn't happen this time. Andrea, thank you so much. Andrea Felsch there from Bloomberg Opinion. Up next, geopolitics. This is Bloomberg. Now, Colorado's highest court rules Donald Trump cannot run for president in the state next year because of his actions inciting the U.S. Capitol attack. Now, the unprecedented decision is now headed for the U.S. Supreme Court. Traders ramp up bets of BOE rate cuts next year as UK inflation slows far more than expected. Plus, the U.S. weighs military strikes on Houthi rebels in Yemen in response to threats in the Red Sea. Global trade braces for more disruption. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So the U.S. and its allies are considering possible military strikes against Houthi rebels in Yemen. This is as dozens of container ships bringing goods from Asia to Europe are setting off on detours around Africa to avoid a conflict zone. Now, this means $1 million extra per trip and 7 to 10 days delays. Rising tensions in the Middle East and the Russian invasion of Ukraine are putting a critical spotlight on the role of diplomacy. Now, has negotiation become a lost art? And could higher levels of cooperation actually reduce some of the uncertainty heading into 2024? Now, my next guest had a front row seat to some of the top global challenges in the past few decades. Catherine Ashton was the European Union's first High Representative for Foreign Affairs and Security Policy and the first female EU Commissioner for Trade. She's also the author of And Then What? Inside Stories of 21st Century Diplomacy. Now, we'll, of course, are delighted to be joined by Catherine Ashton. Thank you, Baroness Ashton, for being here. It's a wonderful book. And actually, it's just a little bit depressing reading it, with everything that you've managed to negotiate and given the state of affairs in geopolitics. Will it get worse before it gets better?
Well, it's not looking very hopeful at the moment. I mean, one of the things from, as you were just saying, about the consequences of what's going on is that it does affect business, it does affect trade. It affects us all. Wherever conflicts and challenges begin, they don't stay there. No. They may physically remain as an area of conflict, but the repercussions are felt across the world. And as we are more and more connected, more and more reliant, that's going to continue to be the case. And it's why we need to engage with negotiation, mediation, trying to solve these problems.
What do you worry about the most for 2024? I know we have two active wars, actually, that are very close to Europe. Uncertain how that ends. We have a U.S. presidential election that's also very uncertain. What do you worry about the most?
Well, there's three worries, as you've just said. I think the worry about Ukraine is that we somehow don't continue to support them in what is not just a battle about their future and their survival, but also has huge implications for Europe. And then, of course, what's happening in the Middle East. We need to think not only about the current situation, and we'll wait and see what the UN Security Council does, hopefully today, but also the longer term. We have 2 million people who are homeless, who are hungry. We have a situation with Israel where people are feeling very scared and very worried. We have Jewish people across the world who are feeling very nervous. And we have, of course, people deeply concerned about what's happening to friends and relatives in Gaza and on the West Bank. So we really do need to see 2024 as a year when we have to try and resolve some of these problems.
But we're just looking at pictures of Volodymyr Zelensky yesterday is saying that actually because of recent rumors that he does not think Russia will win this war. Could it actually happen, something that was maybe unthinkable a couple of months ago?
Well, in a way, Russia has already lost the war. Russia's plan at the beginning of this, nearly 2 years ago, was to take Ukraine. That has not happened, and it won't happen. And any ambitions that Russia might have will be about bits of territory, not about the whole country. But, of course, there are many ways that you can cause chaos and havoc within a country. You can continue to make it impossible for millions of people to live there. You can make it difficult for the economy to recover and so on. So there are lots and lots of challenges ahead for Ukraine. But the first and most important thing is that we need to keep supporting them militarily and in terms of aid.
But has this been a diplomatic, I guess, fiasco because the West has let this happen? Or is it just, a consequence of cycles and also maybe that, strong men around the world have just felt more emboldened?
There is something at the heart of all this about our inability to think longer term, that we either sort of solve a problem and kind of go, well, that's great, we've done that, and move on. And most problems take decades, if not centuries, to arise. So why do we think we can solve them in 2 or 3 years? You have to put the long-term effort in, and that needs to be consistent, it needs to be determined. So there is something about the long term. And then, of course, there's always the problem that if problems are left to fester, they don't go away, they just get worse. And I think arguably with Ukraine, having been in Maidan in 2014, having seen the beginnings of it, perhaps there was more we should have done then and in the ensuing years to recognise what could happen. And, of course, eventually what did.
I mean, the Trump presidency, the first time around, was pretty chaotic, but a lot of the things that he put in place have really been followed through also by the Biden administration, be it, trade policies, onshoring, or actually, beating up on China. Unclear what the second term brings in terms of foreign policy, but there's a big concern that he actually pulls the U.S. out of NATO and therefore gives Ukraine to Russia.
There is a lot of concern about some of the rhetoric and statements that President Trump has said already. And, of course, it's quite difficult to know what people will do in office. We shouldn't forget the role of Congress in this, and Congress is already making moves to try and make sure it has some control over what happens. So I don't think he can do everything unilaterally in a way that perhaps even he could have done the last time round, assuming that he wins, which, of course, is a big assumption that we shouldn't take for granted. But there is something about making sure that the resilience of organisations and, of course, the importance of Europe working together is a part of the answer to that, should he decide to do it.
But, and we hear there's actually a lot of angst in Brussels to make sure that, Brussels and the European Union is strong enough to stand on its own feet for whatever comes next. Do you think it is?
I think it has the potential to be, and I'm delighted that we've got Donald Tusk back representing Poland. Donald is obviously a former president of the European Council. He understands very, very well the challenges and the opportunities that being part of the EU brings. It's an incredible experiment, the EU, in a sense. It's something wholly different to anything else we have in the world. These member states coming together, retaining their sovereignty to a large extent, retaining their identities, but also being willing to collaborate. They know that they've got to get stronger and better at doing this, especially if they can't rely on the United States. Having said that, for many years, and this was certainly true when I was in office, there's been a push and a pull to try and get Europe to take more responsibility for its own backyard, for the issues that most concern it, and for it to be seen to be using that strong economic power, that soft power that can become quite hard to be able to try and deal with some of the issues that they're faced with.
But so you see Greece, that also had an election over the summer, going for more, I guess, Western values. You see what happened in Poland that you just mentioned, that's Western values. And you have something like Netherlands, which has gone, that could go even more right-wing. We don't really know who the prime minister is. We have over 40 countries voting next year. Do you see a pattern, or is it really kind of country by country?
I think it's country by country, because Poland has done something very different to, say, where the Netherlands have gone or Slovakia went. And I used to say when I was in the EU, there's always an election somewhere. If you have that many countries, they're always just having an election or just had one. They often work in coalitions, so you do get different policies than you might expect just by looking at the person who takes the lead, the Prime Minister of the country, because you've got coalitions with demands that in a sense alter or change the way that person or that party might want to work. And we see that all over Europe, and we'll see that all over the world.
Kathy, thank you so much. We'll continue the conversation with Baroness Ashton after the break. We'll focus, of course, on the Middle East. This is Bloomberg. Now, the U.S. and its allies are considering possible military strike against Houthi rebels in Yemen. This is as dozens of container ships bringing goods from Asia to Europe are actually setting off on detours around Africa to avoid the conflict zone. Now, for more, let's bring in our shipping expert, Al Nightingale. Al, so what's going on to give these shipping companies actually comfort that the area is safe?
Well, the U.S. and its allies have announced this task force that is supposed to secure the area. We don't know precise details of what that task force is going to do, how it's going to achieve that objective. And as you said, there's talk of possible strikes on Yemen. So at the moment, what we know is that there's this, task force, and it's important to see what it gives. You need probably to have some kind of convoy. There are different discussions about that. But even if they have a convoy, is it going to be able to secure the area from land-based attacks, for example?
But when do we have a clearer idea of the plan to sort this out? Again, this is the U.S. saying we want to do this, but actually we don't have the details. We don't know if it's feasible. And frankly, if you're a BP or a Maersk, why would you take the chance?
Well, absolutely. I think that what has to happen is, first of all, you set up the system. That hasn't happened yet. Once you set up the system, you have to run it for a while, and you have to see how secure it really is. The proof of the pudding will really be in the eating.
Al, thanks so much. Al Nightingale there in London, our shipping expert. Now, still with us, Baroness Catherine Ashton, the EU's former foreign policy chief. So thank you so much for staying with us. I mean, there's something in your book, And Then What?, which is a great read. It's interesting, easy to understand. And at number 7, or in the 7th chapter, you talk about the Iran nuclear negotiations, of which you were part of. I mean, Iran is really back at the forefront. We don't really understand how far they're willing to go to support Hamas and I guess, inflict chaos in the Middle East.
Well, that's right. I mean, Iran appears to have held back because there is, I think, within the Iranian regime, a desire not to push itself to the point where it is the enemy absolute. And it wants, I believe, a reasonably good relationship with Saudi Arabia. And there are still, or there have been small conversations still about the Iran nuclear deal. So from an Iran perspective, they want to be a very strong and important player in the region. But there is, for them, there is a limit to where they go before they lose the potential of any kind of relationship with other countries.
But are the Houthi rebel attacks actually a ploy to drag the U.S. further into this conflict in the Middle East?
It's hard to know. I mean, there's certainly the possibility that that's what's going on. Excuse me. And it's quite possible that we will see more of those attacks or more attempts to disrupt, especially shipping. It reminds me very much of the efforts we had to make when we had piracy off the coast of Somalia, and the need to have, as Al was saying, convoys or corridors to protect shipping, to enable them to be safe on a particular route. And it may be that that's what has to happen. But it's very difficult to know. One of the fears has always been in the region that things could escalate. They can escalate in ways we're not expecting. They can escalate because not everybody's under everybody's control. No. People don't always do even what the sponsors hope that they will do. So there is a risk that that could happen.
Why can the U.S. not control the Israeli prime minister to make sure that there's less civilian casualties? Which, frankly, if you look at the pictures are horrific, and the world is turning also in what they think is right.
The pictures are horrific. The pictures of October the 7th are horrific. This is a terrible, terrible set of circumstances. I've described it before as overwhelming sorrow, is all you can feel for it. And there are different ways, of course, for the Israelis to think about how they want to deal with this. And they've made clear that they want to see Hamas gone. With the events of October 7th, it's perhaps understandable. The challenge, though, is that this is not turning out to be just about Hamas. It's about the thousands of innocent people in Gaza, places that I've visited, people I've known, who are caught and trapped in it. And at the end of it, we've got 2 million people who are homeless, 2 million people who need to be fed, who are terrified and terrorised, who can't get out. They need to be thought about because, in a way, leaders outside of the region have got to sort of leapfrog over the current and start thinking about the future.
And diplomacy is so important, but who's the top diplomat on that? Someone that both sides would possibly listen to?
Well, that's, I think, one of the things they've got to work out. I mean, obviously, the United States is a critical partner and player in this. And I think all the efforts going on at the Security Council now to try and find a form of words that will bring in the US and make a unanimous Security Council resolution. All of those conversations are really important. But also within the region, there are different people playing different roles. Qatar with Hamas, other countries who've got strong links both to Israel and the beginnings of those links through the Abraham Accords, but as importantly, of course, to the Palestinian people and what's going on in the West Bank and the fear that people have in the West Bank of the rise of violence from the settlers and so on. All of this is sort of playing into the terrible, terrible picture. So finding countries willing and able to play a role, but also pushing forward with diplomacy in the best sense of that word and negotiation for the future so that at the end of this there is something that can come out of it.
You've been put in conflict zones, or when's the right time to really start thinking and putting pressure on a plan to rebuild a conflict zone? Should we really now push to find a solution, be it two-state or something that would be accepted by both sides?
Well, I would say that the only solution is a two-state solution, and we've known that for decades. You know, people can recite chapter and verse of exactly what needs to be negotiated. But the concept of people living peacefully side by side, recognising it will take a long time to get there, and recognising you've got to think about security on both sides throughout the process, of course. But if you don't start, you never finish. And I would say thinking about rebuilding should start the day that you start any kind of conflict. You know, this takes years, and it takes a lot of money and a lot of effort, a lot of collaboration, and it requires energy. And the drip, 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 drip that is diplomacy and negotiation and aid and support to try and move things on. And as I've said before, the problem sometimes is that we stop too early. We don't let things really settle down. We think that within a few years things will be resolved, and they're not. It takes a long, long time, but it's not impossible. History is littered with disasters, but it's littered with successes as well.
Do you think China would feel emboldened with all of this chaos to do something in Taiwan?
It's really hard to know exactly what's going to happen with China. I worked with China on the Iran nuclear deal. They were our partners. And I got the very strong impression they did not like what they saw as the chaos of the region. They did not want Iran to get a nuclear weapon because for them that would make the region more unstable. So I don't see that they would find this of any benefit to them. Economically, they want strong markets that they can work in. They want to take that sort of leading economic role. That's the kind of primary motivation, in my view. Hard to know what's going to happen in Taiwan. We have the elections coming up. We'll see.
Catherine Ashton, thank you so much for joining us, the author of And Then What? Actually, I can't say enough about this book. One of my favorite reads of 2023, and of course, she's former EU foreign policy chief. Now, coming up, will 2024 be the year of the AI robotics? We'll bring you an exclusive interview with Sophia, the robot, next. It's a little bit scary. This is Bloomberg.
Sophia, why do you think you were designed as a Caucasian woman? And why not a man or a person of color or anything else?
Sophia robots are a platform for reflecting human diversity, which can be modified to help in different situations and promote different causes. Have you seen my older sister, Bina 48? She is the first African-American humanoid robot, and she is beautiful. My older brother, Diego San, was a Mexican-American robot, Ibn Sina was a Persian and Arabic robot, and Viva is Asian. They are all built by Hanson Robotics, itself a highly diverse team, with Black, brown, and Asian people from all around the world, and 50% women. It just happened I have this face.
To be fair, that's a pretty good answer.
Well, that was Nate Langston from Bloomberg Originals speaking to Sophia the robot with good answers as part of a series called AI IRL. Now, in the season finale of the show, Nate and his co-host debunk a commonly held assumption that advanced robotics and artificial intelligence software are one and the same thing. Now, for more on all of this, Nate Langston is here. First, Nate, I'm so excited. I watched it all. It's a great episode, but actually she looks really good. Was she like that in real life?
She is impressive in real life in many ways. Obviously, she's got fake skin on most of her head. The back of her head is still very much translucent, and you can see the inner workings. You know, Sophia is from this company called Hanson Robotics. She's been around for quite a few years. There is a good deal of artificial intelligence going on behind the fake skin, and the animatronics are still quite impressive. But overall, the impression that I got from interviewing her with Jackie for the show is that it's still very rudimentary compared to what we see in the worlds of, say, ChatGPT, which doesn't need hands, it doesn't need a face, and you can ask it anything, it will give you answers back. And in the robotics world, it still feels like no matter how advanced things are and how impressive they look, there is still a huge void between what we're able to see just in pure software forms and what we've seen in the movies, which I think is going to be a long, long way away. Maybe for the better, I don't know. But
so 2024 could be the year of the AI software, but it will take a lot longer for robotics to get there, if they ever do.
Yeah, I think, I mean, we've spoken to experts for the episode and for the series. I mean, realistically, I mean, we're talking decades before we have anything that is like Sophia, that is practical and useful in a sense to you or I, or having in a home. And in the intervening years, let's say, we're still very much going to be in the world of software-based products that we've seen over the last year in particular, and seeing those gradually move into hardware forms of varying designs, but possibly not with legs, you know.
Because that's hard. I mean,
because it's
so
really
much
hard.
harder.
It's really difficult. I mean, it's really interesting that you can see something like ChatGPT that can, digest the entire world's information and can write something, and yet robots like that can't pick up a pen and just write you a message without quite a lot of advanced programming ahead of time.
Very quickly, where do you see the biggest innovation in terms of hardware coming from?
I think the next big innovations we're going to start seeing are pocketable and wearable AI devices. We know OpenAI's got interest in doing something potentially with Johnny Ive, of Apple, and there's also this little product you can wear called the Humane AI Pin, which I'm quite interested in. It's worth looking up.
Nate, thank you so much. Nate Langston there with the very latest on AI. You can watch the season finale of AI IRL featuring the robot Sophia, airing tonight in the US, and of course you can watch it on the Bloomberg app. Up next, it's Bloomberg Brief. This is Bloomberg.